Hello again, this is Alex with MasterChartsTrading.com, and this is Friday, January 10th, 2020. This is a market recap. As always, please hit the like button, subscribe to this channel, share the video with others, and ask your friends to sign up for the channel. I'm trying to push to 1,000 subscribers, so your help would be greatly appreciated. Okay, so stocks again at records despite a plethora of bad news, lots of bad news, but stocks just don't care. They just keep going. Junk bonds are confirming this move higher. We're seeing nice, just incredible breakouts to new records for discretionary technology and industrials, all offensive sectors. We'll look again at the Apple trade now up over 54%. It's pretty amazing. We'll also look at ROST stores and Facebook trades, also up quite nicely. I closed my position in USO. I'll show you why, because of the oil pullback. Dollar is somewhat indecisive. We'll look at euro and yen and possible tapping candles on both gold and silver. And Bitcoin could be getting ready to roll over. Okay, so let's look at S&P. It is again at record highs. Lots of news here that were just deemed irrelevant for the markets. Uh, I sometimes tend to overthink this stuff, and nothing really so far is stopping the stock market. It just keeps going. Eventually, I don't know when or where, and actually nobody knows when or where, at what price level there will be a pullback. But it would be most likely viewed as a buying opportunity. So where do we look for buying opportunities? And I keep showing this trade because technically this trade could still be open. QQQ, Nasdaq 100 ETF. So my personal preference is to buy on relatively deep pullbacks. I like to buy on pullback towards the blue line. So what is this blue line? So these green, blue, red, and yellow lines are part of my indicator package that I sell at MasterChartsTrading.com. You can sign up at MasterCharts Trading, and then I will open the door for you on TradingView. Right now, the trading indicators are only available for TradingView, and we're working to get them to MetaTrader as well. But for now, they're only available on TradingView, which is actually free account. You only need a free account on TradingView, and once you sign up on my site, yeah, I'll open the door for you. So this particular trade occurred actually in June of 2019, and this is all we did. We were waiting for the pullback towards the blue line. Bottom in action occurred, then another close above the blue line, and we just bought right there on the 4th of June, 5th of June. And look at this incredible move, 26%. Yeah, you sit in it for a long time, um, but overall, this is the kind of trades that I prefer. I'd like to sit in positions as long as possible because, data, our data, backtesting data repeatedly shows the same thing that basically the longer you stay in position, the better the results. So this position would have been still open because I would have trailed at the blue line itself, um, potentially taken some profits. But overall, just incredible move. Uh, it's getting really toppy. It's getting really like almost parabolic advance. Uh, so a pullback is very likely, but again, we don't know from what levels. What if it goes up another 26%? And then starts to pull back. Or maybe it will start pulling back right now. Nobody really knows. We can only, at least we need to know, are we buying or are we shorting? In this case, we clearly want to be buying because we are in an uptrend. How do I know it's in an uptrend? The stock has closed above the blue line. That's all I need to know. Get your own indicators and start trading. So it's really easy. Same goes for Dow Jones. Here's the alert back in May of last year. And this one is good for 15% gain. DIA, very nice move. Again, overextended but not weak. Same thing. IWM, 52-week highs. It's underperforming a little bit, the general indices, but overall still in a bull market. So I would be looking for buying opportunities for small caps as well. The junk bonds are also at new records, 52-week record highs. So junk bonds and stocks, as I keep saying, they move together in lockstep. For junk bonds, alert was sent right there. Let me just zoom out a little bit more because it was a while back. It was actually in January of last year. Junk bonds broke out and never looked back. So overall, this trade could have still been open once again because I would have been trailing at the blue line itself. So junk bonds moving higher together with stocks is showing that there is no divergence, and you know stocks and bonds, stock and junk bonds generally move together. If there is no divergence, that means junk bonds are confirming the move higher, so to speak. Some of the recent breakouts, here is one for XLY, consumer discretionary, very economically sensitive sector. So if this one is at record highs, I'm pretty sure economy is doing quite well. 15% gain, latest alert occurred here in June of last year. You can get your own indicators and start trading as well. So consider going to MasterCharts Trading and getting your own indicators. Technology, XLK, similar to QQQ, but even stronger, 29% gain. Latest alert again in June of last year. Beautiful move. I think it's definitely overextended, but not weak. Once again, overextended to the upside means there is plenty of buyers. There's very little sellers. Same goes for industrials, XLI. Latest alert was good for over 14%, and it's still going. Uh, Again, I would be holding it because I would have been trailing at the blue line itself, but possibly taking some profits along the way. So overall, you can do many things once you have profits. Uh, the most prudent thing is actually to just do nothing and sit in the position, because sometimes you catch those big moves and they just continue and keep going. Okay, so another look at Apple. Here's Apple at record highs once again. So 54% move from the recent alerts, one in August, another one in July, and another one in June of 2019. Uh, I don't know what to say about this. It's just beautiful. And once again, I would probably be still holding it because I'll be trailing at the blue line. There is not even, I mean, it's definitely overextended, but once again, it's not weak. So overextended, overbought means it is strong. Okay, another example, ROST stores. These are again actual alerts. There's the actual alerts back in April and then May of last year, and there was several ones in February. All looking beautiful, looking great. I would have still been trailing at the blue line. Uh, Very simple. You notice that my system is just extremely simple. You can use it if you're an advanced trader. You can use it if you're a basic, beginner trader. You can still use it quite nicely. So all you have to do is just look for a stock that's closing above the blue and just buy it there. The stop is at the yellow line. If you need any, more help, then just send me a note. I'll explain. So ROST stores, this is part of XLY, consumer discretionary. as economically sensitive as it gets. So people are shopping, obviously, and that means that economy of the United States at least is doing quite nicely. Here's another example. Facebook. Okay, so latest opportunity, latest alert right there on the 2nd of October, 3rd of October 2019. Very nice move. Just hit new records again this past few days. Over 22% move. Uh, so once again, I would be holding the stock and trailing at the blue line itself. Potentially may want to consider taking profits, but with my experience, it's once again better to hold for longer than to sell it out. Okay, let's switch gears. Let's look at oil. A little bit busy chart, but let me just go over it because I actually opened several positions. Here's one. I actually bought USO here on the 7th of November. Kind of meandered sideways and finally broke out. Uh, Let me show you on the USO. So here it is, my USO trade. I opened here on November 7th. On 19th of December, I sold a quarter of the position, advanced my stop to the blue line. Then finally, on the 8th of January of this year, I went ahead and I closed my position. So overall, profitable. Um, this big candle here on the 8th of January just shows that there is resistance and it's stopping. I already was worrying about here on the 3rd, 4th, 3rd, 6th, and 7th of January, but the 8th of January was just clearly bearish candle. And also it closed below where I actually want to exit, right at the blue line. So that's where I exited. So overall, oil is showing signs of easing of tensions, and we're just gonna, deal with it. I mean, low oil prices are good for economy most likely, and the United States is producing a lot of oil of late. So even if there is disruption of supplies in the Strait of Hormuz and in the Middle East, there is still plenty of oil in the world. So not as big of a deal as it used to be. Oil is just not as big of a deal as it used to be, like for example in the 60s and the 70s. But still, it's tradable instrument. We trade it. You can trade it using my indicators, and I am trading them using my indicators. So there's the trade. Okay, so let's switch gears again. This is Forex DXY dollar index. Not very decisive action. So the individual components are sort of going their own way, and especially interesting USD JPY. Now notice here is a purple arrow up. I'm not trading USD JPY on the upside because it's kind of weird to me, because if the dollar index is going down, why would I want to be buying USD JPY? So I put a purple arrow here, meaning that if you're interested, you could be, buying it. And actually, I would be buying it right this instant, USD JPY, if I was trading it. So kind of weird action uh, with USD JPY going higher while the euro versus US dollar is going lower. So both in favor of US dollar. Um, but other currencies like British pound and Canadian dollar and the Swiss franc are all in favor of the not United States dollar. So mm, weird action. So let's just wait and see. I don't want to really trade euro or Japanese yen right this instant. I want to see more decisive action. Gold, as a result of all of this, is experiencing interesting times. So the interesting times is right there on the 8th of January. This could be a top-in candle. Um, Is it a tapping candle? We will see. But overall, this trade is actually just it's a very nice trade. Look at the size of this move, 25% move on gold from May. And again, this position would have still been open because there was really no, I would have been trailing at the blue line itself, and there was no touch or close of the blue line. So overall, 25% move on the gold futures is a very nice move. Right this instant, possibly tapping candle. We will see about if it is indeed the tapping candle. If dollar weakens further, I think gold will appreciate. Same goes for XAG USD, the silver candle right there. Silver on the 8th of January, big bearish looking candle as well. So, um, I mean, this alert from 26th of December was definitely successful because you could have made tons of money here when it popped higher. But right now, perhaps it's pulling back and perhaps it's tapping. So if it is indeed tapping, then we will deal with it later on. Finally, Bitcoin, I think it's already rolling over, and I would be looking for more signs of rolling over around the red line, currently at 8735. Uh, and yeah, it's in a bear market basically. Okay, that's it for today's recap. Please head over to MasterChartsTrading.com, click on sign up, and sign up for one of the services. So I have alerts, which is basically a newsletter. You get various alerts, such as, for example, ROST stores, 29%, Apple, over 54%. This is the type of alerts that I actually send out to my subscribers. You can also get the trading indicators, which are available again for TradingView. This where I'm hovering right there, these are actual indicator overlays, and you can have them on your chart for TradingView. Simply sign up at MasterCharts Trading and I will open the door for you. And of course, the best deal I think is to get both alerts and the trading indicators. It's $49.95 per month. It's a steal, and you can also get it for a yearly subscription. The reason being, the reason why it's much better to have both alerts and the indicators is because you also, in addition to the indicators that you get on your chart, you also get tons of various examples that I send on daily basis. So definitely consider getting the entire package. Okay, if you have any questions, please send them in. Please don't forget to like the video and subscribe to this YouTube channel. It's very important because I'm trying to push my subscriber base a little bit higher, over 1,000 subscribers, and then uh, hopefully we'll get even more subscribers. So do share this video with others. Again, if you have any questions, please send them in. Thanks for watching. Bye-bye.